In this video, I'm sharing 6 things you need to watch out for before 2020 ends so you can keep more money in your pocket, pay less taxes, and prepare well for next year. And we are starting right now. Hey guys, it's Thomas here. This channel is to help Canadians to make better choices on their retirement, wealth, and insurance. If this is something that you're interested, click that little red button now so you know when a new video is out. 2020 is coming to an end. Let's be honest, it's been a difficult year for everyone, but we can certainly make the most of it so we can be better off to a much better start in 2021. So, the first thing to think about is the CERB. CERB has ended last week as of December 2nd, which means you can only transition to neither EI or CRB if you're qualified. As a reminder, EI gives 55% with at least $500 per week for 26 weeks up to 45 weeks, and CRB gives a flat $500 per week for 26 weeks only. I talk about the difference between the two and the top 10 FAQs. For greater details, I'll leave a link to them here, so be sure to check them out. Another reminder is that if you receive CLB but then you realize you received more than you should have, then you will need to pay this back by December 31st, 2020. Now, this could happen when you apply for the CLB not knowing that you actually didn't qualify, or back then some people might apply to both CLA and Service Canada at the same time. And since the Canadian government wants to roll out that benefit ASAP, they don't have time to verify every transaction, so you might end up getting double payments. Either way, if you're one of these two, you can log back into the CLA portal and pay it back. Or you can visit canada.ca website, they'll have more information on how to return it. The next thing to think about is budgeting for your taxes. If you want to pay less taxes, then you need to start thinking about it now. Especially this year, all benefits including the CERB, EI, and CRB, they're all taxable benefits. For CERB, there was no tax withheld on the $2,000, so you are responsible for all the taxes on that income. For EI and CRB, 10% is withheld, but still, this may not be enough. Chances are you will need to pay more taxes for those benefits in April 2021. If you're an employee working 9 to 5, this might have been something that you didn't have to worry about before because taxes are already deducted from your paycheck for you. The amount of money that you take home, part of it you already prepaid the CRA. In this case, if you receive benefits, make sure you're aware that you need to write a check back to CRA. Also, if you are laid off this year, even for just a portion of the year, you might have received additional payments such as severance package or vacation paid. So again, there are chances that you're actually making 10 to 30% more compared to other years. And here's an example. Sam worked for the first 4 months of 2020 and then he got laid off. Fortunately, he got his severance package and the remaining vacation paid out as well. He then qualified and received 2 months of CLB and he also found a new job as well. So with all the income combined, he's likely making more than he was in the previous years, which also means he will need to pay more taxes. Now, if Sam predicts that even though his income is higher this year and expected to return to normal or be lower next year, what he can do is to contribute to his RRSP first, reduce his taxable income this year, and take it back out next year to balance the tax consequences. So to budget for your taxes, my recommendation is put a portion of the money aside, don't touch it, and save it for the next year's tax season. Now, on the topic of RRSP, that leads to my third point, which is to think about your RRSP. RRSP will help you with your 2020 taxes, and the bank usually tells you that you have until February to contribute RRSP. However, I don't recommend waiting, and here's why. You'll spend the money if you don't put it away, especially around this time of the year. You have Christmas, Boxing Day, New Year. The environment will make you want to spend the money, so instead of waiting until February to put it in, start now and break it up into 3 months if you want to. Trust me, it's less painful to watch that money move away. And if your income is high this year, use that RRSP to offset your income. Then if next year, if you still don't have that income, you can always take it back out from the RRSP so you can average the tax burden in the 2 separate years. Also, for people who is 71 now, be sure to talk to your bank or carrier who manages your RRSP. Because at the end of age 71, it is mandatory that our RRSP change to RRIF, meaning you are forced to take some of your money out. The question is, do you want to take it out as a lump sum? Or do you prefer a monthly payment? And it's always a good idea to talk to the carriers to plan it out. Otherwise, they will plan it for you. So if you have questions about your RRSP, not sure if your account is on track, feel free to reach out. I'm more than happy to go through it together with you and make the recommendation on what will work best for you. My contact is also in the description box below for a free consult. The fourth thing to consider is your tax-free saving. If you're making a lot of in and out of transactions to your tax-free saving, make sure to watch out for your room because you will get taxed if you exceed your contribution limit. Basically, if you always max out your tax-free saving this year and took some money out, you cannot put it back until 2021. So echoing back to my previous point about RRSP though, a lot of people will take their money out from the tax-free saving and put it into the RRSP in February. In this case, I recommend doing now in December so your room can be resetted on January 1st. Then by the time April comes around and you get your tax return, you can then put it back in your tax-free saving. Otherwise, you will need to wait for another full calendar year to put it back in. Okay, number 5, save and don't spend. Duh, yes, it's a duh, but many people forget about it. A lot of people might think that just because you didn't do any traveling this year, that gives you the right to spend extra money to treat yourself. But here's my friendly reminder. Don't buy things just because it's on sale. Instead, save that cash smartly by investing it into things that give you a return. Now, that could be putting it into the stock market, real estate market, or it could also mean investing in yourself too, like taking a class or reading a book. And now I will end off with my last point, which is to make a difference. Let me ask you this. What will you be doing differently in 2021? And what are you doing today that you'll be doing differently than yesterday? Especially looking back at 2020, it is indeed a difficult year for a lot of people. And to the rest of us, this year is very different. And I hope you will take the time to self-reflect on what you have done well in, where you can improve and find what's important to you as we head into 2021. Time goes by fast and life is short. For me, I always challenge myself to do something new each year. So in 2020, that was my starting of my YouTube journey. It's something different and definitely very challenging thing for me to do. So yeah, I want to say thank you to you. Thank you so much for being on this journey with me. So what are your goals next year? Tell me in the comment below and make sure to stay tuned for my next video where I'll be giving my thoughts on 2021 and how to prepare for it from a financial perspective. Again, if you found this video useful, really appreciate it if you can give it a thumbs up. Thanks so much for watching and I'll see you in the next video.